We don't talk a lot about Wynn Resorts, right? And we're going to still get into inflation, what that means for the market, and all those sorts of things. But I had to mention Wynn because this is a stock that we don't talk about very often on the channel because obviously, there's so much going on with Meta and Palantir and Tesla and some of these other more popular stocks. So we don't even get to talk about Wynn. Wynn Resorts is actually in a great position, which I don't know if you guys know. They got 2 properties, obviously, here in Vegas, so the creme de la creme properties. They have 3 properties in Macau, two in the old part of Macau, and then they have Wynn Palace, which is the granddaddy of them all. They also have Wynn Boston Harbor, and they're actually building a property now in the Middle East that's going to open here in the next couple years. So Wynn's obviously just a solid company, really well run. They've always been like that, but Macau's starting to tear it up again, guys, okay? Macau GGR, gross gaming revenue, just came in at nearly $600 million in the first 9 days of July, says JP Morgan. Now, you might not know, why is that relevant? What does that mean? Well, here's the deal, okay? At this level, we believe mass GGR is comfortably running at 90% plus of pre-Rona levels. And we continue to expect 100% plus recovery in mass by October. This basically means Macau is back, baby, okay? Which means you now basically have the go-ahead to invest in companies like Las Vegas Sands, Wynn Resorts, and others now at this point in time, which is phenomenal because those ones have kind of been scary off limits for a long time, as in 3.5 years, if not close to 4 years now. Those stocks have been off limits because until you could really comfortably see Macau getting back to what it used to be and then hopefully growing from there, they're kind of untouchables. But now we finally at a moment where it looks like they can actually be investable opportunities. They can actually be buy the dip type stocks, building out to nice size positions, which is huge. So I might consider actually starting to add to Wynn stock again now at this point in time. We'll see what happens. I got to relook at valuations across the board, kind of what my expectations are for future years as far as Wynn's, revenues go and as far as their bottom line goes. So we'll see what happens there, but I can tell you things are looking pretty promising. And then that property in the Middle East, I mean, the thing is, okay, there's not a lot of competition in the Middle East. And especially for a property like Wynn, it should be very interesting to see the sorts of numbers that property puts up over time, okay? So, nonetheless, folks, a lot of exciting things going at Wynn, and it's kind of one of those sleepy stocks that goes under the radar, but I really like what's going on there, okay? Now, Rivian stock is being a beast right now. I don't know if you guys have seen Rivian stock, but that stock's been doing absolutely extraordinary, okay? And it's interesting because not a lot of people know that they might be actually directly benefiting from Rivian's kind of move here. So if we go ahead, wait, did I not hit this? Rivian, and I have it somewhere on a watch list, but I'm not sure where. Let's go ahead and take a peek at Rivian on a 1-month basis here. Let's see, Rivian, 78% just in the past month. That's incredible. In the past 5 days, Rivian's up 38 flip and flapjack in percent, okay? Now, you don't have to own Rivian stock to make, let's call it, gains from Rivian stock. There's another way you can participate in Rivian. If Rivian does great over this next, 5-10 years and becomes a massive automaker, which I think is a potential, you can participate through that through Amazon stock. I personally own Amazon stock. It's been one of the top stocks I've been buying for the last 6 to 9 months. And obviously Amazon's main businesses are their e-commerce business and AWS, right? And they got other businesses like Whole Foods they own, and their advertising business and Twitch and other things, right? But they own a substantial portion. If I recall, it's just over 20% of the total Rivian company Amazon owns. So it's just another thing that's out there, if you want to kind of be a beneficiary of Rivian, but you don't want to own the stock, you can also own Amazon stock and benefit just as much. Amazon always reminds me of Tesla's twin in terms of the way those companies are valued, in terms of their long-term opportunities, in terms of obviously game-changing CEOs. Obviously, Bezos stepped down a couple years ago, but his DNA is still in that company, obviously. And so, yeah, man. Anyways, a lot of exciting stuff happening at Tesla. A lot of big stuff that I think is not getting the publicity or the talk right now because everybody's talking about Elon Musk and what he's tweeting and that versus Threads and all this stuff, and it's just exhausting. But believe me, there's a lot of stuff that's going on at Tesla that's extremely exciting for Tesla, the company. And yes. Now, another thing for Powell to consider is this, and I don't think enough people look at this, okay? There's a commodity index. Now, commodities matter in a massive way. Why? Because everything you possibly do in this world, you have to use a commodity to get that something to, for production, right? Whether we're talking about steel or oil or natural gas, like everything out here, it comes from some sort of commodity pretty much, right? So when we're talking about GSG, this is the ultimate way of kind of tracking commodities over time, right? And in terms of GSG, it is actually down slightly for the year, which is great. That's phenomenal. And that's versus the Qs, which are up nearly 40%. So this is another indicator that I think Powell and the Fed should take into account, that commodities aren't moving. Despite the market looking great, commodities aren't moving at all. Commodities are down double digits versus this time last year. So we're looking pretty good as far as that goes. Everything's going exactly as planned. Fed needs to just chill now at this point in time and just kind of play middle ground. And then once they actually get several months of in the twos, then they can go dovish, and then they can go and, call victory. But don't call victory yet. Just kind of be that middle ground right now. That's where Powell needs to move here, okay? Now, public account today just closed at, I believe, the highest it's been at since 2021, right? And I kind of think about that, and it's like, is this crazy or anything like that? And the way I kind of think about this is not really at all, to be honest, right? Because if we look at like the S&P 500, we're still many hundreds of points away from an all-time high on this S&P 500, right? And obviously, we should see a much strengthening earnings picture at the end of this year, and especially in 2024, right? Energy is going to hold us back a little bit for the next few quarters, but I think 2024 should shape up to be, as long as the economy continues to hold up, which so far has held up pretty darn resiliently, right? As long as that holds up, we should be up very nicely Q4, Q1, Q2 with earnings per share for S&P 500, and talking considerably up versus like 2021 type numbers, which means the market ultimately should be quite a bit higher than it was back then. So if you're thinking about, S&P 5,000 or something like that, it's really going to come down to earnings, right? Which is what we're about to get into in a massive way here with earnings season, right? If you want to play dangerous, we can play dangerous. Some of the MJ plays, like the Planet, Avant, companies that have big, huge cash stack balance sheets, they're trading at the lowest valuations pretty much they've ever traded at in their histories are pretty dang close to it, right? Those stocks are, if you want to play a little dangerous, you can play a little dangerous. And those type of stocks that have that like insane kind of risk reward profiles behind them, right? Now in the MJ space, be careful if you're trying to find any stocks that, or let's just call it, have bad balance sheets. If you look at Avant's balance sheet and you look at Planet's balance sheet, those are probably the two best you'll find in the entire MJ industry. If they're not the best, they're certainly very, very close to it, okay? And so just do keep that in mind, because that industry looks like it's kind of bottoming out and things should start to get better in the back half of this year, but you can't always plan on everything getting better. What if it gets worse? That's where balance sheet comes in a pretty substantial way, and it looks like Avant and Planet are pretty set as far as that goes, right?